Welcome to the Investors Real Estate Radio Show with Kevin Mills, where we dive into the dynamic world of real estate investing. Whether you're a seasoned investor or just getting started, join Kevin as he shares expert insights, tips, and strategies to help you navigate the market, build wealth, and achieve your financial goals. Tune in for actionable advice, inspiring success stories, and the latest trends in real estate, all designed to empower you on your investment journey.
Hello, everyone, and welcome to another episode of the Investors Real Estate Radio Show, and welcome back if you're one of our regulars. Today, we're going to do a show that I have done before, at least once on the Investors Real Estate Radio Show. It is one that we've done on the Investor Guys podcast. It is one that I literally just did yesterday for a show I have, a new show that's called Really Kevin Real Estate. Really Kevin Real Estate. Yeah, say it too fast, you might trip over your tongue. You can find that show along with a couple of the shows that I do at reallykevin.com. This is a show that I will undoubtedly be doing again on Investors Real Estate Radio Show because it is a very powerful show. It is powerful numbers. And if you've listened to me in the past, you know, I always tell you, buy the numbers, do it by the numbers, and numbers don't lie. If you have the right numbers, if you know which numbers you're looking at, you know they're the right numbers, and you're doing the calculations correctly. If the numbers are good, then you do the investment. If the numbers are bad, you don't do the investment. I don't care what it looks like. I don't care what it smells like. I don't care what you think you can do. Do it by the numbers. Absolutely. So what I love about this episode is it is all numbers. You're going to do this step by step with me so that you can see these numbers for yourself. And I hope that by the end of the show, you are excited, you are riled up, and you are ready to get out there and use this as one of your strategies if you are already investing. If you're not already investing, I hope this motivates you to get out there and start investing in real estate. Now, the strategy that I'm going to share, it's going to work with any investment that you do. You can use this for stocks, you can use this for bonds, you can use this for any investment at all, as long as you're getting a good return. And when I say a good return, I'm talking 40% or greater. I don't invest in real estate projects that don't yield a 40% per year or greater return on investment. So that said, let's jump in. We're going to talk about the most powerful real estate investment, most powerful investment strategy out there. I'm going to tell you how to build a multi-million-dollar real estate portfolio using compound interest and leverage. We're talking about transforming an initial $50,000 investment into a portfolio that is worth over $14 million and is going to put more than $1 million in pre-tax profit into your pocket year in and year out. Does that sound ambitious? Well, stick with me because you are going to see how it is possible, my friend, and we're going to tell you about it on today's episode of the Investors Real Estate Radio Show. We're going to break down the numbers. We're going to talk about real-world scenarios, and I'm going to give you practical tips on how you can replicate these strategies. We're going to be answering a lot of the questions I know you're going to have, but before I get started, I want you to grab a pen and paper, a pencil and paper. I want you to get out your smartphone. I want you to get in front of your computer. I want you to get something that has internet access because I want you to be able to follow along with me on these numbers. First thing you're going to do is do an internet search that says compound interest calculator. Now, one of the returns that's going to come up, it's going to be a little ways down, probably 6, 7, 8, depends upon which service you're using. It's going to say the calculator store or the calculator site. Sorry. You're going to click on the calculator site and you're going to follow along with me. And the reason I have you use the calculator site isn't because they're a sponsor or anything else. They aren't. The reason I have you use that is because it is one of the ones that I found that calculates higher interest rates. A lot of the calculators, the compound interest calculator sites that you're looking at right there, they don't calculate more than 10 or 20%. The calculator site calculates considerably more than 40%. I think you can do 100%, 150%, all the way to whatever. So that is why I use that particular site. It's also very simple, very easy to understand. So what we're going to do is in that calculator site, all right, have it open. I'm going to give you the numbers to plug in and you're going to follow along with me. But before we get to that, let's start talking about compound interest. What exactly is it and why is it so powerful? In essence, compound interest means that you can earn interest not just on your original investment, that $50,000, but we're going to earn interest on the interest that we're earning. So we're talking 40%. I'm using 40%. You can absolutely make 60, 80%, even more. I've got properties that are yielding 200+% return on investment. And I'm not talking about one or two properties. I have a significant number of properties. I have properties that are yielding over 300% return on investment. And no, I don't have a whole lot of properties that are doing that, but I do have some. 40% is bottom line for me. That's why I'm using 40% interest. Now, you don't have to say, okay, well, I can get 60 or 80%, and you absolutely can. And I'm going to dump all 60 or 80% in there. Consider investing 40% into this and keeping your other 20 to 40% as money in your pocket to keep you going so you can continue the strategy. Also, I want to give you something to think about while we're going through this. You might have $50,000 of your own, but imagine going to somebody else, another investor, having them lend $50,000 to you, or $100,000, or $200,000, or $500,000. Once you understand how easy it is to get people to lend you their money, finding capital to work with is not difficult. Most people are not earning 20% return on their investment. If you could give somebody a 20% return on their investment, they would be happy to give you their money to invest. You can easily earn over 40%, give them 20%, continue to put that 40% back on their money. Do you know what kind of returns you're doing if you're investing somebody else's money? Your return on investment is even greater because you have less of your money invested.
Live the resort lifestyle every day with Cayman K. The perfect pieces for every wardrobe. Shop the entire Cayman K collection and find your favorites. Find all our styles at CaymanK.com.
Absolution X. Lifestyle apparel like no other. Only at AbsolutionX.com. Get yours.
Awaken your potential and harness the strengths of your inner self. Online courses that you complete at your own pace. Set and achieve all of your goals. Packed with an ever-growing catalog of information, resources, learning programs, weekly recorded coaching sessions, podcast, posts and more to keep you on track for your best life. Because the only person who can guarantee your success is you. www.reallykevin.com.
So for this scenario, and to keep the math simple, we're going to assume this is $50,000 of your own money, okay? And we're going to talk about the types of returns that you're going to make using it as leverage with a 40% return on investment. So again, let's get back to talking about compound interest. What exactly is it and why is it so powerful? In essence, compound interest means that you're earning interest on the interest. That's simple. In order to do that, we're taking the money that we make, that ROI, and we're putting it back into our investment. And for this particular model, we're talking 40%. So we're putting back into the same model that is generating us 40% year in and year out. In real estate, this concept is even more potent, even more powerful, because unlike simple interest, which is what you're going to see there in your calculator, okay, real estate returns grow exponentially over time because we have appreciation on our portfolio. We have equity value that's going into our portfolio. We're not going to be calculating any of that, but keep that in mind as we do that. If you're using a buy and hold strategy where you're getting rents, do rents go up every year? Absolutely. They may not go up a lot, but over the course of 5 years, 10 years, 15 years, they do. Did your payment go up over the course of 5 years, 10 years, 15 years? Not if you bought the property using a conventional loan. You don't have an adjustable rate or anything else. If you're using a simple, smart way to acquire the property, your payments are not going to go up, but your rents are going to go up. The value of your property is going to go up. Let me give you an example. Imagine you're starting with that $50,000. You're earning 40% annually, and you're reinvesting all of that 40% back into your initial investment. That initial investment snowballs as your profits start generating more profits. This is the engine behind long-term wealth creation, my friends. This is what the big boys do. This is why they continue to get richer, why they continue to grow their portfolios. They continue to be able to have time to sit out on their yacht and play golf while the money continues to come in. It is the money working for them. I've recommended this book a lot of times on this show and other shows, and I'm going to recommend it again, just in case you haven't heard it. Robert Kiyosaki's Cash Flow Quadrant. Cash Flow Quadrant, Rich Dad, Poor Dad, Robert Kiyosaki, get it. It is going to help you understand how this type of strategy is what you want to be tapping into. This is making your money work for you. Whenever you're working for money, you're never going to get ahead. Whenever your money is working for you, that is the life that you want. Okay. So check out that book. That's going to give you a lot of a reality check for sure. On top of all of these things that we're talking about, the equity, the valuation, everything else, on top of that, you're earning the residual income from that 40%, which we're going to reinvest. This is what's called a multi-layered growth strategy. I'm going to show you just how to do that in a minute. How your $50,000 can multiply into millions of dollars. But let me quickly remind you before we get started on that, if you like watching this show, if you value the information that you're receiving from it, by all means, like it on your favorite podcast platform. Go to investorsrealestateradio.show.com. Find all of our shows there. Find our social medias there. We don't really have a whole lot of social medias. We've just been doing the show for so long. We started before social media. Haven't really gotten into it. If there's any up, like us, follow us there. But absolutely subscribe, like, follow us on your favorite platform. You can find all of our episodes, all of our current episodes. We actually dumped all the old ones into our archives because we have been doing this since the late 90s. So we have shows upon shows upon shows upon shows. This started off as a radio show, so no, we don't have radio shows posted on the internet from the late 90s. But we've been doing video shows and recording our shows for over 10 years. I don't even want to say how long. Excuse me. So let's understand the concept of compound interest, and let's get into the details of how it works in real estate investing. We've got that $50,000 and we get an annual return of 40%. We reinvest our returns, letting compound interest do its magic. The key is not taking the profits out right away. The key is putting them back in, reinvesting everything, and letting it ride. So just like when you're at the table in Atlantic City or in Vegas, you make some money, you say, let it ride. We're going to let it ride, but we're not gambling with our profits because we have it in secure real estate. Now, will our real estate portfolios fluctuate a little bit, go up, go down? Yes. Over time, though, they're going to consistently go up and they are going to consistently gain value. So this is a long-term strategy. Do not worry about whether your values of your real estate are up or whether your values are down. We are purchasing this real estate that is making us 40% return on investment. If the value of the real estate goes down, we're still going to be making a 40% return on investment or greater. Because like I said, over time, rents go up. Property value may go down, but our rents very rarely go down. So don't worry if your value fluctuates a little bit. It's all normal. In the end, your real estate is going to be worth more than what you bought it for if you did your numbers the right way. Now, here's where it gets interesting. After just 8 years, your initial $50,000 investment has grown to approximately a whopping $1,114,265.85. That's approximate 85 cents. That's right. Now, over $1 million in less than a decade. That's your overall investment. Okay. Your gross portfolio value at this point, and actually, before I get into that, I forgot to tell you guys what to put into your calculator store. Go into your calculator store. We're going to start with a $50,000 investment. Your return is going to be 40%, and it's going to be yearly. You've got a choice of daily, weekly, monthly, yearly. We're going to choose yearly. Okay. And I want you to calculate it for 15 years, but don't get ahead of me. Don't jump down to 15 years. You're going to have your mind blown for sure if you do that. Just follow with me, but put those numbers in just like that. A starting value, 50,000, 40% is our return, compounded yearly, and we're gonna do it for 15 years. Okay. And you can later after the show, you can put different amounts in there. You can do it for different periods of time. Play with it. I encourage you to do that. Okay. So over $1 million in less than 10 years. That's pretty significant. Our portfolio value, the way we're going to find our portfolio value, the gross portfolio value in 10 years, okay, is going to be $5,571,329.25. Now, the way we find that is look at that third column on the calculator site. That third column is going to be that entire amount that we just have, that we invested. We're using leverage. Okay, so we're trying to get these properties for 20% or less. Let's say they're 20%. Okay, if you get it for less, even better. But let's say they're 20%. So what we're doing is we're taking that third column and we're multiplying it times 5. That is going to give us our gross value of our portfolio. This does not account for what equity we have in the property or anything else as far as what tenants have put into it or anything. This gives us the gross value. This is at least what our portfolio is worth. This doesn't also account for appreciation. We're talking about 8 years, 9 years having this money invested. Our property values should have gone up over that period of time. It does not account for that either. So without accounting for any of those factors, which are all usually positive factors for our investment, our real estate investment, you're looking at a portfolio with a gross value of $5,571,329.25. That is the beauty of compound interest combined with the appreciating value of real estate. Let me break it down. Let me break down the numbers even more. Sorry. I love this. To me, this is what keeps me going at night. All right. Each year, your money isn't just growing linearly. It is growing exponentially. And with a 40% return rate, that growth accelerates pretty fast. Of course, in real life, there's additional factors like appreciation and equity that we just talked about that are going to push that portfolio higher, that are going to push your returns higher. That means the numbers that I'm giving you right now are probably less than what the reality is going to be when you get to that point. Let that sink in. Now think about it. Just 8 years and you're already at $1 million. But this is just the beginning. As we add leveraging into the mix, things get even more exciting. Now, before we go on talking about leveraging, don't forget, I want you to check out Really Kevin for resources. I promise I'm going to put more real estate resources up there. Right now, there are a lot of motivational, a lot of coaching resources. I will start getting more real estate resources up there, but I want you to make it a point to go there and see what is there. ReallyKevin.com, and then catch all of these shows. And I'm going to put more real estate resources on our website here also, InvestorsRealEstateRadio.com, InvestorsRealEstateRadio.com. Make sure you follow our show on your favorite podcast platform, wherever you're listening to it. And you can also check us out. All the shows are on our website.
Awaken your potential and harness the strengths of your inner self. online courses that you complete at your own pace. Set and achieve all of your goals. Packed with an ever-growing catalog of information, resources, learning programs, weekly recorded coaching sessions, podcast, posts and more to keep you on track for your best life. Because the only person who can guarantee your success is you. www.reallykevin.com.
Live the resort lifestyle every day with Cayman K. The perfect pieces for every wardrobe. Shop the entire Cayman K collection and find your favorites. Find all our styles at CaymanK.com.
Absolution X. Lifestyle apparel like no other. Limited editions. Unique, exclusive designs. Seek your absolution. Get yours. Only at absolutionx.com.
All right, now that we're back, let's take things to the next level with leveraging. Leverage means that we're using borrowed money, usually in the form of a mortgage or a loan. And I'm not talking about the $50,000 necessarily. You can absolutely borrow that, but I'm talking about the other 80% of the value of the property that we are financing using our $50,000 as our 20% down, whether that's $50,000 for multiple properties or $50,000 for a value property. We're not buying a property for $50,000 because though we might be able to find the property for $50,000, we've got one property. If we take that $50,000 and we leverage it, using it to put 20% down, we can buy multiple different properties for the same amount of money, and we're getting more income on multiple properties than we would from that one single property. So to finance a larger portion of our real estate investments, we are using other people's money to buy additional properties and amplify our returns. And it may just be the bank that carries the mortgage. That is still considered OPM. So let's go back to our initial $50,000 example. You can use that $50,000, 20% down payment to acquire properties worth $250,000. Now, instead of just having that $50,000 invested in, say, a $50,000 property, we now have those multiple different properties worth $250,000, and that's going to continue to grow. We're growing the value of that portfolio. That's where our portfolio value comes in, and that's why we're using that math to calculate the gross value of our portfolio. Now, with this method that I'm talking about, by year 10, you're earning $1,233,000 to $233,058.53 annually. Think about that. That is $1.2 million that you are earning, that you are putting in your pocket every single year. If you decide at year 10 that you're not going to reinvest any of your 40%. Now, keep this in mind. If you take this money out, you're just talking about the value of your portfolio. At 10 years, if you start taking your cash out, your 40% return on what you have invested, year over year, you should have at least $1,233,058.53. Year after year, you're going to have more because, like I said, rents go up, property values go up. But your portfolio is going to earn that for you year after year. Now, your real estate portfolio, gross value, $6.1 million. That's a pretty significant jump from 50,000, which is where we started. It's even a significant jump from the 8-year mark. $6.1 million in gross value for your real estate portfolio. And again, we're taking that column 3 and we're multiplying it times 5. That is the power of leverage. That is the power of compound interest. Leverage multiplies our portfolio. value. It multiplies our returns. And it's important to remember that it can multiply our risk, but if we are investing correctly and we're doing our numbers, then we can't ever mitigate 100% of our risk, but we can pretty confidently know that we are going to be able to beat whatever small risk factors might be out there. There's always going to be a risk of something. But if we do our numbers, we know what information we're looking at, then we can absolutely make investments with confidence. Now, we'll talk about mitigating risk in a different show. This is not the time for it. I want you guys to focus on the types of returns you could be making from real estate. So looking ahead, we've already seen how our initial $50,000 can grow into $1 million and a multi-million-dollar portfolio. What happens if we keep compounding and leveraging this money past that 10 years? What happens if we let it ride? Remember, we're in Vegas, let it ride. At 11 years, we're looking at a portfolio value of no, that's not correct. We are looking at the third column value is $3,740,600.08. $3,740,600.08. And it is generating an annual return of $1.2 million. That's $1.2 million profit in our pocket. And you can do the math. If you take that 3,740,600.08 times 5, that will be the gross value of your portfolio at 15 years, or sorry, it's 11 years. I say 15 years because we're going to fast forward now to 15 years. I ask you to calculate on the calculator site to 15 years. Let's take a look at that 15-year mark. Your portfolio has blown up, people. It is worth at least $91.2 million with a pre-tax annual profit of nearly $6 million. Do you understand what that means? Are you following me here? If you decide to take your cash out, I'm not talking about the whole value of your portfolio. I'm saying if you only take your annual return on the investment that you have in there, okay, you're talking about $6 million in your pocket every single year for as long as you decide you want to do that. $6 million in your pocket. Is that something that you can handle? Is that something you can deal with? Are you able to maybe make the bills and stuff that you have on $6 million, or should we let it ride longer? Should we let it ride? You can do the numbers when we're done with the show. You can see what it would be if you let it sit for 20 years. You can 30 years, whatever it is. A lot of you that are listening to me, you are in your 20s. If you are 25 right now and you do this strategy, you will be 40, and you will be a multi-millionaire over and over and over again. Every year, what you make makes you a multi-millionaire. The fact that you have a portfolio with a gross value of over $91.2 million makes you a multi-millionaire. Is there any reason why you should not be getting started on this strategy today, right now? I don't think so. We are talking about exponential growth. The numbers only get bigger and bigger as time goes on. Could you take some of that $6 million and reinvest it into the same strategy again? You absolutely could. Could you pretend you're playing blackjack, because we've been using that Vegas scenario? Can you double down? Can you split? Absolutely. What can't you do with $6 million? You can't buy something for $12 million and pay cash, but imagine the investment potential that you have after 15 years with a $6 million annual return on your investment year after year after year after year. That is exponential growth. That is what we're talking about when we're talking about a growth factor for a strategy. It's about letting time and smart strategies like this one work in our favor. Now, to visualize this, imagine a graph where your portfolio starts as a small little tiny anthill, okay? And it grows up into, I can't even reach that high. Over time, it becomes a giant mountain. The longer we allow our investments to grow in this type of strategy, and there's no reason why you couldn't let your investment continue to grow, pass this on to your family trust, do this multiple times over. It doesn't have to be just this $50,000 and you're done. When you start figuring out how to do this multiple times over. Imagine having this type of an income times 5, times 10, times 20. Again, remember, we started off with $50,000. I have students who did this with $50,000, and the second year they mastered being able to borrow money. They mastered being able to do investments well enough that they were able to put another $100,000 aside. They have their $50,000 strategy starting from their year one. They have $100,000 starting at year 2, and they're still going to let it run for the 15 years. Year 3, they're going to put in another 100,000 plus, and they're going to let that ride, and they're going to let that ride, and they're going to let that ride. And when you consider that you're going to be making $6 million in just 15 years cash on your portfolio that you're still going to own, is $50,000 that much of an investment? It really isn't. We've talked multiple times about finding OPM for your real estate investments. We will do it again, so make sure you follow the show. We're not going to do it right now just because we don't have time. Once you do this, though, once you have seen what compound interest and leverage can do for you, your next logical step is raising capital to expand this strategy. So don't wait for me. Get on the internet, start doing research, check out some of our old shows if you have access to them still. Find out the best ways to start getting investment capital so that you can replicate this strategy multiple times over. Remember, this is an investment strategy. I happen to like real estate. I happen to think this works perfect for real estate. There are plenty of people who would be happy to earn a 20% or greater return on their investment. I can easily get that for them and still have 40% to reinvest into this strategy. And their investment is secured by real estate. If you have a real estate portfolio worth over $91 million, how hard do you think that's going to be for you to just go out and get a loan for a few $100,000, let alone a few $1 million? It's not going to be difficult. So future episodes, we'll dive into that and we'll cover it more. Don't wait for me. Hit the internet, figure out how to do it. Let's shift gears now. Let's say that you put $100,000 on. Here's what's crazy. Most of you think if you double the money, you're going to cut the time in half and you're going to cut or double the profits. That is not the case. There is a variable to this. Okay. So understand the variables, do the math for yourself because you have the tool now right there in front of you at the calculator site. Okay. Do the math, figure out which type of scenario is going to work best for you. But I want to, because you can do this with $100,000. You could do this with a 60% or 80% return on investment because there are plenty of investment strategies. If you're flipping houses and you're not making 80% a year on your money, you're not doing it right. New investors should be making 60% plus return on their investment every year just starting out. So if you're not making those types of numbers, you're not doing something right. You need to watch us more. You need to watch us more no matter what, but you need to watch us more so that we can get you on the right track. We're going to use $100,000 instead of $50,000 using the exact same principles, the exact same interest rate, the concept of compound interest and leverage. We're going to grow that $100,000 into an even greater portfolio and even greater returns. It will take approximately 9 years for that $100,000 to grow to $3,451,100 $178.52. At that point, you are earning 1.1 million, $1,122,646.82 is what my numbers are telling me every year in pre-tax profits. Now, imagine if you reinvested those profits instead of taking them out at 9 years. Let it go for another year. You know what it's going to be? If you got your calculator out and you're already doing this with me, you know your portfolio could be generating over $1.6 million every single year in 10 years with a $100,000 investment. A gross value, this is where the difference is. The gross value of your portfolio in 10 years is $25 million. Let that sink in. 10 years worth of real estate investing. You've got a portfolio that's worth $25 million or more realistically. You've got $1.6 million coming in every year into your pocket pre-tax after all the bills are paid, after the mortgages are paid, after the taxes are paid, after the insurance is paid, after maintenance is paid, after your property management has been paid, after everything has been paid. Excuse me. Let's let it ride, right? Let it ride. We keep investing. And year 15, because we did 15 years for our $50,000. Guys, if you're not on the calculator site, you should do that really quick so that you can see that what I'm telling you is the truth. Year 15, you're looking at a pre-tax profit of $11.9 million each year. That's $11.9 million each year. That's almost $12 million every year in your pocket with a portfolio value that is $182.9 million or more. Does that sound too good to be true? It's a fact. It's a reality. I want you to look over those numbers, listen to the show again, go over the notes that you've taken. If you are not convinced to invest in real estate after watching this show, after watching these numbers, then I don't know what else to tell you. I do appreciate you being here. I hope you will join us again if you can fit us in between your busy investing schedule. I'm Kevin Mills. Thanks for watching the Investors Real Estate Radio Show. Happy investing.
Thank you for tuning in to the Investors Real Estate Radio Show with Kevin Mills. We hope you gained valuable insights and are inspired to take your real estate investments to the next level. Remember, success in real estate is within your reach, and with the right knowledge and determination, you can achieve your financial dreams. Stay connected with us for more expert advice and resources, and until next time, keep investing with confidence.